Hey everyone, this is Adam Thomas here at skyviewtrading.com, and I'm looking at a potential trade right now. This is a stock, it's GDX, it's the gold miner ETF, and I noticed something somewhat interesting. So if you look up in the top left and you can see my studies IV percentile, I have the 6-month and the 3-month as well. So what I notice is there's a big difference in each of these. So the IV percentile is at 26%, but then you look at the 6-month IV percentile and things get a little bit interesting. You can see it's up at 56, which is much higher and is a pretty decent IV for selling premium. So why are these so different? Well, if you look in the bottom left at just the implied volatility, you can see there was a huge spike in IV. And it's so dramatic, so it was probably just a bad quote or something like that, but what it's doing is it's throwing off the 52-week implied volatility percentile, whereas the 6-month IV percentile doesn't include that day. I also noticed that the 3-month IV percentile is at 0, so that means it's at the lowest it's been in 3 months. So I'm going to go ahead and throw GDX out. Let's take a look at GLD, and this is the ETF for gold. Yeah, so you can see GLD's been getting crushed today, and if you look at the IV, the numbers aren't great, but they're decent. 6-month IV at 44%, and GLD typically has tons of premium in the options to sell, so I'm going to look at the options in here and see if we can't make a trade. So I'm going to put on a bullish trade in GLD, and what I'm thinking I might do is a skewed Iron Condor, where I skew it to the bullish side. So we're going to go to these options with 45 days to expiration. So I'm going to right click the 107 call, and I'm just going to see what the 107-108 call spread is trading for. So you can see it's at 47 cents. And what I'm going to do is I'm going to also add a put spread to this, but I'm going to widen the strikes out. And the reason for this is just to skew it to the bullish side. So you can see we collect more than the width of the call strikes. So the call strikes are 107, 108, that's 1 point wide, but we're collecting $1.48. So what that does is that means we have no risk if GLD goes higher. And with the traditional Iron Condor, typically you can lose money on the call side and the put side, but that's not the case with this one because of my strike selection. So it looks like we can collect about $1.47, and I really like this trade actually because it puts my break even at the old low, around 103.50. So if GLD stays anywhere above its old low, we're going to make money. So this trade has a really high probability of success. So I'm going to go ahead and change my contracts to 10 contracts, and I'm going to see if we can fill at 1 penny below the mid price. Oh, and okay, awesome. So I filled at $1.47, just 1 penny below the mid price. So GLD options are pretty liquid. And I'm going to go ahead and send this text alert out to the members. So max profit on this trade is $1,470, and we make money anywhere above 103.53. And alright guys, hope you enjoyed the video. And if you'd like to learn how to trade these strategies and also see what I'm trading real time, then head over to our website at skyviewtrading.com, and I'll see you in the next video.